Atn Business on Atlantic Television Network right here in the city of Port Harcourt. This is the network's medium of bringing the happenings in the economic sector of society to our discerning viewers. This program is aimed at bringing to the doorstep of viewers the business, financial and economic activities from all strata of society. Its delivery is accentuated through the various stock exchanges across the world, news about government economic activities, private sector business activities, laced with expert opinions, stakeholders analysis, and correspondence report. First, the headlines: infrastructure. Government approves 8.2 billion naira for 15 development projects. And in economic empowerment, federal government rallies women to lead Africa's $29 trillion ambition. In investment, FBN Holdings PLC's gross earnings hit 3.33 trillion naira as profits rises. And on to power sector, federal government unveils $23.2 billion energy compact, targets $15.5 billion investments. CBN Naira reverting to true value as confidence returns. Cardoso. We are open for advert placement, bookings and commercials. You can connect with us on all our ATN socials on Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1, on Twitter, Atlantic TV Net. You can watch us live on our website at www.atlanticnetwork.tv. We take a short break, and when we return, we head straight into our stories. Do stay tuned. Welcome back, and thank you for staying with us. Kano State Executive Council has approved the sum of 8.2 billion naira for the execution of 15 major projects across the state. Governor Abba Yusuf spokesperson Sanusi Tofa disclosed this in a statement on Wednesday after the State Executive Council meeting. According to the statement, 2.7 billion naira was earmarked for the construction of classroom blocks across all 44 local government areas, while 2.3 billion naira was allocated for the cost review of the dualization of key roads, including Government House Roundabout, Race Course Road, and Daola Hotel Roundabout. This also includes additional projects covering Nasarawa Hospital Road, Dawaki Road, and Lugard Road. The statement added that 1.8 billion naira was set aside for the remodeling of Africa House Conference Hall and consultancy services at the Government House. Similarly, 1.2 billion naira was allocated for the supply of 479,000 liters of diesel for September to December 2024 and 16,000 liters of PMS for KSWB Chalawa in September 2024, and 790.7 million naira was approved for settling KEDCO liabilities. The statement also noted that 378.7 million naira was designated for the payment of foodstuff suppliers to boarding schools for the first and second weeks of the ongoing second term, while 303.6 million naira was earmarked for the printing of security documents by the Nigerian Security Printing and Minting PLC for the Ministry of Land and Physical Planning. Vice President Kashim Shettima has declared that women will be at the forefront of Africa's projected $29 trillion economic transformation aimed at advancing gender equality and economic empowerment. According to Shettima, gender inclusion is not merely a rhetorical commitment, but the cornerstone of Nigeria's National Development Agency. Shettima spoke in Abuja when he declared open the first Gender Inclusion Conference. She's included to bridge gender gaps in finance and the broader economy, held at the State House Banquet Hall, Presidential Villa, Abuja. This is as United Bank for Africa (UBA) declared that move to promote gender inclusion will serve as panacea for breaking the barriers of poverty and economic stagnation in the country if properly implemented. The conference, with the theme Breaking Barriers, Rebuilding Resilience for Sustainable Women's Economic and Financial Inclusion, builds on the 2024 ASU Accord for Economic and Financial Inclusion and underscores Nigeria's commitment to achieving Sustainable Development Goal 5, gender equality and empowerment of all women and girls. We cannot build the Nigeria or Africa we envision without fully integrating women into our ecosystems. Women are not just participants in our economy, they are leaders, innovators, and the bedrock of sustainable development, the Vice President stated. According to him, projects #She's Included is built on 4 key pillars of education and financial literacy, maternal health care, gender-sensitive policies and programs, and expanded economic opportunities for women. He also announced that the initiative will reach all 774 local council areas across Nigeria to ensure that no woman was left behind. Our commitment to gender inclusion is not a cosmetic performance to placate the sensibilities of progressives. It is a fundamental pillar of our National Development Agency. We are not just assuring the women of Nigeria of their place in our collective journey, we are creating the pathways for them to lead the charge, Shettima said. In her remarks, the Chief Justice of Nigeria, Justice Kudirat Kekere-Ekun, said the conference was an important milestone in the collective effort to outline ways of breaking barriers towards empowering women and promoting inclusion. She said gender inclusion was a key enabler of sustainable development and central to addressing poverty and fostering economic growth, noting that it should translate into financial independence, wealth creation, and leadership development for women across different sectors. In his remarks, Chairman of the Body of Bank CEOs and Group Managing Director GMD of the United Bank for Africa UBI PLC, Mr. Oliver Alawuba, commended the federal government, describing the move as a bold initiative with the potential to create opportunities for everyone to thrive. Atn Holdings PLC solidifies its position as a leading financial institution in Nigeria, delivering an impressive result for the year ended December 31, 2024. As reflected in its unaudited group financial statement, Atn Holdings recorded a 142% year-on-year increase in profit before tax to 862 billion naira, while gross earnings surged by 113% year-on-year to 3.33 trillion naira. Key highlights of the results show that net interest income grew by 155% year-on-year to 1.39 trillion naira. Non-interest income rose by 43.3% to 846.9 billion naira compared to 255.8 billion naira in 2023. Loans to customers increased significantly by 2.797 trillion naira, closing at 9.4 trillion naira. Customer deposits rose by 62% to 17.29 trillion naira, and total assets increased to 26.54 trillion naira, up from 16.94 trillion naira. The group also recorded a higher average earnings yield of The group also recorded a higher average earnings yield of 16.71% on the back of growth in loan volume and other earning assets for the year compared to 10.69% in 2023, despite the higher cost of funds, 5.79% in 2024, 3.36% in 2023. Net income improved from 6.11% in 2023 to 9.61% in 2024. The high rate environment is reflective of the hike in CBN monetary policy rate over the period from 18.75% as of December 2023 to 27.25% in December 2024. Deposit liabilities grew by 62% from the commercial banking group on account of continuous supported by investments in digital banking capabilities, brand recognition, and an impact of naira depreciation on the translation of FCY denominated deposit value in the future. The group is committed to further enhancing revenue and profitability by strengthening our value proposition, refining our governance model, and maximizing operational efficiencies. In the face of the increasingly competitive environment, the group maintains a forward-looking approach with a clear aim of building a sustainable institution and surpassing stakeholders' expectations. Federal government has unveiled a $23.2 billion National Energy Compact in private sector investment to bridge the country's energy deficit and promote cleaner, sustainable energy solutions. 300 Africa Energy Summit held in Dar es Salaam, Tanzania. aligning with the UN Sustainable Development Goal 7 (SDG 7) to ensure universal access to modern energy services. The two-day summit, hosted by the government of Tanzania in collaboration with the African Union, African Development Bank Group, and World Bank Group, brought together African leaders, business executives, and development partners to advance the continent's ambitious energy agenda. The event aimed to accelerate electricity access for 300 million Africans by 2030. While unveiling the program, the minister stated that it aims to expand electricity access, boost renewable energy adoption, and enhance clean cooking solutions for millions of Nigerians. Central Bank of Nigeria has insisted that the naira will stabilize as investors' confidence improves. The CBN Governor Yemi Cardoso stated this in Abuja yesterday during his address to the Monetary Policy Forum (MPF) with external stakeholders. He said the monetary authority is confident that the policies introduced so far are certain Nigerian international investors are concerned. The naira is at a point where it is a lot more reflective of its real rate, as a result of which it is more competitive, he noted. He added that Nigeria has witnessed an uptick in interest from international investors, stressing the need for collaboration among policymakers, the private sector, and the civil society to drive a meaningful change. Cardoso highlighted that the forum provided a platform for engagement, allowing all the stakeholders to exchange ideas and refine strategies for the road ahead. He explained that the forum is an avenue for dialogue and collaboration on the critical issues shaping monetary policy. He asserted that Nigeria has witnessed relative stability in the foreign exchange market, a narrowing exchange rates disparity, and raising external reserves to over $40 billion as of December 2024. Cardoso stressed that the growth in external reserves was organic, adding, so not only do we have a higher reserve number in relative terms, but also the health of our reserve level is certainly good, much stronger, and has been more bolstered. We'll go on a quick break, and when we return, we'll dive right into the rest of our stories. Do stay tuned. Welcome back and thank you for staying with us. Governor of the Central Bank of Nigeria, Olayemi Kadoso, has said that without the bank's policy interventions, inflation would have surged to 42.81% by December 2024. He also projected that diaspora's remittances would rise to 31.79 trillion naira when fourth quarter figures for 2024 are released. The Apex Bank's boss further pledged to stick to orthodox monetary policies to tame inflation in 2025. Kadoso spoke at the 2025 Monetary Policy Forum, which brought together ministers, heads of economic agencies, and private sector players. He stated that counterfactual estimates suggest that without decisive policy interventions, inflation could have reached 42.81% by December 2024. He further noted that throughout 2024, the CBN implemented bold policy measures across 6 monetary policy committee meetings, including raising the monetary policy rate by 875 basis points to 27.50%, increasing the cash reserve ratio for all of depository corporations by 1,750 basis points to 50.00%, and adjusting the asymmetric corridor around the MPR. Kadoso said counterfactual estimates suggest that without these decisive policy interventions, inflation could have reached 42.81% by December 2024. Kadoso highlighted that the CBN implemented critical foreign exchange reforms to enhance market efficiency. The unification of multiple exchange rates windows contributed to a 79.4% rise in remittances via international money transfer operators to $4.18 billion in the first 3 quarters of 2024, up from $2.33 billion in the same period in 2023. Other major FX-related interventions included clearing a $7 billion FX backlog, which restored market confidence and improved FX liquidity, lifting restrictions on 41 items previously banned from access to the official FX market since 2015, and introducing new minimum capital requirements for banks effective March 2026 to enhance resilience and global competitiveness in the sector. Tracker, the service delivery platform of Budge IT, has revealed that 17 contractors received 2.4 billion naira for 15 projects across 9 states, yet none of the projects have been initiated on the sites monitored. The platform, which allows citizens to track and provide feedback on public projects, highlighted several payments, including the payment of 401 million naira to mainstream contractors in December 2023 under the Federal Ministry of Works and Housing for the rehabilitation of Welcome Nasarawa Farewell from Nasarawa, linking the north and southern parts of Nigeria in Nasarawa local government area. Nasarawa State 153 million naira to iSense Light Limited between August and November 2023 under the National Institute for Construction Technology UROMI for the fencing, landscaping and completion of Onika Uku Town Hall and Event Center at Anyocha Oshimili in Delta, and 88 million naira to A3 Interbiz Link Service Limited in December 2023 under the Pharmacists Council of Nigeria for the construction and equipping of a PAC center in Adedeji Community, Ikurun, Osun State. These payments are part of 3.9 billion naira for projects nationwide that were abandoned or never executed. Trackers 2023/2024 report titled Achieving National Development Through Efficient Service Delivery, launched on January 30, 2025, also tracked 1,404 projects worth 282.5 billion naira across 25 states. Of these, 720 projects, 51% were completed, 332 24% were ongoing, 129, 9% were abandoned or poorly executed, and 223, 60% were not executed. Nigerian National Petroleum Company Limited and other marketers in the downstream oil sector imported more than 633 million liters of premium motor spirits, petrol, and automotive gas oil diesel in January 2025, despite the production of these commodities domestically. The latest industry data on the importation of PMS and AGO by these firms indicated that they brought in over 458 million liters of petrol and 174 million liters of diesel during the less than 1 month duration. Although some dealers said the move was to bridge domestic fuel shortages, others argue that the $20 billion Lekki-based Dangote petroleum refinery could meet the country's refined petroleum products demand. The move indicates a continued reliance on imports, even as the country aims to boost domestic refining capacity and reduce dependency on imported fuel, a factor that has contributed to the devaluation of the naira. It is also in contrast to earlier public declarations by marketers to prioritize domestic supply following the inauguration of 3 major refineries. A document detailing the amount of fuel imported into the country obtained by our correspondent on Thursday showed that the NNPCL brought in the highest volume, totaling 158,740 metric tons of petrol. Going by the conversion rate of 1,341 liters to 1 metric ton, it therefore implies that the oil firm brought in about 212.87 million liters of petrol between January 1 and 29, 2025. The national oil firm also imported 62,866 MT of diesel into the country within the same period. The amount represents a total of 120.1 million liters when converted to liters. The situation described by oil and gas experts as baffling and shocking is against the backdrop of the widely publicized operational commencement of the 210,000 barrels per day Port Harcourt refinery and the 125,000 barrels per day Warri refinery by the NNPCL, making a combined capacity of 335,000 barrels per day. It raises questions about the effectiveness of these facilities in achieving self-sufficiency. Banks across the board have complied with the ruling of Justice Deyinde Dipiolu of the Federal High Court delivered on the 29th of January 2025, lifting the Mareva injunction again placed on GHL, its directors and stakeholders. The compliance by the banks was effected in the face of false and misleading statements by FBN Chairman Femi Odotola, Managing Director Olusegun Alebiosu, and lawyers in the press today, maliciously and mischievously misinforming the public on the clear and unambiguous ruling by the learned judge. This falsehood is the latest in a pattern of deceit and dishonesty from the First Bank of Nigeria that has left the public shocked and disappointed that the supposedly first-rate financial institution in a constitutional developed democracy like Nigeria would go so low and unconsciously and willfully disobey the law and continue to spread false information at will and without remorse. GHL has thus been left to file multiple cases across borders seeking damages for defamation, libel, and breach of contract. It will be recalled that the Mareva injunction was secured in the first place by First Bank when they suppressed material information and failed to fully disclose a subsisting judgment of the same Federal High Court in Lagos. GHL will continue to seek justice worldwide against First Bank for breach of contract by obtaining a benefit without complying with its obligation after restating its financial statements with the critical support of GHL, who are now asking the court to determine if First Bank's audited accounts are correct in the face of non-compliance with conditions precedent for those restatements in 2021/2022, where their 306 billion naira loss became 151 billion naira profits, as stated in their current rights issue. MRS Oil Nigeria PLC on Thursday reported a foreign exchange loss of 1.29 billion naira in its audited financial statement for the year ended December 31, 2024, reflecting the impact of currency fluctuations in its operations. Despite this, the company recorded a 71.3% increase in revenue to 312.23 billion naira from 182.31 billion naira in 2023. The oil marketing firm's profit after tax rose by 59.5% to 6.51 billion naira in 2024, up from 4.05 billion naira in the previous year, driven by higher sales and improved operational efficiency. However, its net finance income stood at 130.09 million naira, reversing the net finance cost of 13.65 million naira recorded in 2023. The financial statements show that the cost of sales increased to 288.31 billion naira from 167.31 billion naira in the previous year, aligning with the surge in revenue. Gross profit rose by 59.5% to 23.92 billion naira from 15 billion naira in 2023, underscoring the company's ability to sustain profitability despite the challenging economic environment. MRS Oil also declared a dividend of 809.2 million naira at 2.36 naira per share, reflecting its commitment to rewarding shareholders. The company's total assets nearly doubled, rising from 54.83 billion naira in 2023 to 105.43 billion naira at the end of 2024, fueled by significant growth in inventories, trade receivables, and cash reserves. Cash and cash equivalents saw a rise to 18.48 billion naira from 5.91 billion naira, indicating stronger liquidity. The company's trade and other receivables also increased to 26.81 billion naira from 20.75 billion naira, while inventories jumped to 25.74 billion naira from 7.63 billion naira. On the liability side, total obligations surged to 77.11 billion naira from 32.22 billion naira recorded in 2023, driven by an increase in trade payables, which stood at 66.22 billion naira, up from 21.73 billion naira. The company's tax expense also rose significantly to 3.27 billion naira compared to 1.94 billion naira in 2023. A further breakdown of the foreign exchange loss showed that MRS Oil incurred a loss of 1.46 billion naira on vendor balances, partially offset by a gain of 209.6 million naira on customer balances. Meanwhile, MRS Oil and Gas Limited, a related entity, stored products worth 1.5 billion naira for the company in 2024 compared to 935.70 million naira in the previous year. Transactions with the outfit during the year amounted to 44.73 billion naira, significantly higher than the 10.7 billion naira recorded in 2023. Newsmen reported that MRS Oil Nigeria PLC has projected a revenue of 129.36 billion naira for the first quarter of 2025, as reviewed in its latest financial forecast. Revenue Mobilization Allocation and Fiscal Commission has announced plans to deploy space technology as part of a presidential initiative to optimize revenue generation and enhance digitalization efforts. The initiative was unveiled at a stakeholders meeting held at the Commission's boardroom on Thursday in Abuja. Speaking at the event, the chairman of RMAFC, Dr. Mohammed Shehu, described the initiative as a significant milestone in Nigeria's efforts to enhance fiscal efficiency. He explained that the move aligns with President Bola Tinubu's economic recovery agenda, which prioritizes revenue enhancement by discovering new and innovative revenue streams. Shehu recalled the president's inaugural speech, where he emphasized the need for an expanded revenue base to drive economic growth. He stated that the success of the administration's renewed hope agenda depends largely on the adoption of modern revenue generation methods, with space technology offering a cutting-edge solution to track and optimize revenue service sources across various sectors. He acknowledged the National Space Research and Development Agency as a key partner in the initiative and commended the agency for its role in conceptualizing the project. According to him, space-based solutions have been successfully deployed in other countries to boost revenue by improving data collection, monitoring taxable assets, and enhancing economic intelligence. He emphasized that the traditional methods of revenue collection are no longer sufficient and called for the adoption of modern technology-driven solutions to meet the country's growing economic needs. He stressed that the importance of using modern methods of revenue generation cannot be overemphasized and urged Nigeria as a developing economy to leverage this cannot be emphasized and urged Nigeria as a developing economy to leverage this innovation to maximize its potential revenue potential. Shehu said, "We stand at the threshold of a new era where innovation, creativity, and collaboration can drive economic growth and progress. It is indeed not an overstatement to say that the traditional sources and methods of revenue generation, apart from the fact that they are no more in vogue, are most importantly not sufficient to meet the evolving needs of our great nation. Therefore, as key stakeholders, we must think innovatively and collaboratively to unlock new opportunities for economic growth and development, all in the interest of our beloved country." At this juncture, let me appreciate the management and staff of the National Space Research and Development Agency, the brain behind this noble idea of using space technology to unlock the revenue potential that abounds in the country. We're going to quick break. When we return, we look at the stock market, foreign exchange market, and what the exchange rate is today. Do not go away. Welcome back and thank you for staying with us. Nigerian equity markets maintained its bullish momentum at the close of Thursday's trading session, recording a total turnover of 348 billion naira, signaling a positive outlook for investors. In terms of market performance, the all-share index rose by 194.69 points, or 0.19%, to close at 104,744,000 points for the three. The ASI has recorded a week-on-week gain of 1.9% and a year-to-date gain of 1.77%. Other key indices such as the top 30 index, consumer goods index, and industrial index also posted gains, reflecting positive sentiment across various sectors. The market capitalization of the Nigerian exchange stood at 64.9 trillion naira by the end of the session, with 126 listed equities participating in the day's trading. A total of 497,363,256 shares were traded in 13,716 deals, reflecting a 19% increase in volume compared to the previous trading day. However, there was a 12% decline in turnover and a 16% drop in the number of deals. Out of these, 39 stocks closed in positive territory, while 25 recorded losses. Leading the gainers chart was Honeywell Flour Mills, which saw a 10% increase in its share price, closing at 9.35 naira. It was closely followed by Chelarams, which also gained 10%, and Northern Nigerian Flour Mills, which appreciated by 9.98%. Skyway Aviation Handling Company rounded off the top gainers, climbing 9.89%. Other notable gainers included Red Star M Express and Enamelware. On the flip side, Guinea Insurance led the decliners with a 10% drop in its share price, ending the day at 0.72 naira. ROT Briscoe declined by 9.7%. Veritas Capital Assurance lost 9.3%, and May and Baker fell by 8.95%. Atn Holdings recorded the highest trading volume with over 83 million shares changing hands, followed by Veritas Capital Assurance with 40 million shares. Universal Insurance Company with 26.8 million shares, and Fidelity Bank with 24.8 million shares. Despite the overall gains, some indices such as the Insurance Index and the NGX Industrial Index showed weaker performances. Newsman reports that the Nigerian exchange witnessed a market reversal on Tuesday as equity investors gained 364 billion naira, following an improvement in the all-share index, which surged by 0.57% to close at 104,549.74 points. US stock index futures rose on Friday after Apple forecast strong sales growth, while investors awaited key inflation data that could influence the Federal Reserve's policy decision. Apple gained 3.4% in pre-market trading on upbeat executive comments in its earnings on Tuesday, in a sign the company will recoup a dip in iPhone sales as it rolls out AI features. Investors appeared reassured by guidance that revenue growth is expected in the low to mid-single digits in the coming quarter. Deutsche Bank analysts said in a note, the December personal consumption expenditures price index is due to be released at 8:30 European time, with headline inflation expected to increase 0.3% month-on-month and 2.6% annually. Excluding the volatile food and energy component, the PCE price index is expected to rise 0.2%. Annually, it is expected to stay put at 2.8%, according to economists polled by Newsman. The central bank held interest rates steady in its latest rate decision earlier this week, and Fed Chair Jerome Powell said there would be no rush to cut them again until inflation and jobs data made it appropriate to do so. Intel advanced 1.3% after the chipmaker posted December quarterly results that beat analysts' low expectations, while its forecast for current quarter revenue missed estimates. Chevron fell 2.2% after reporting fourth-quarter earnings below estimates, while ExxonMobil rose 0.8% after it beat fourth-quarter profit estimates. Outflows from U.S. equity funds cooled to the lowest in 3 weeks in the week to January 22, buoyed by shifting expectations for a pause in rate cuts after a benign U.S. core inflation report bolstered equities. Weekly net selling in the U.S. equity funds fell off to $3.2 billion during the week from about $8.26 billion worth of net outflows in the prior week. Data from LSEG Lipa showed outflows from large and mid-cap funds cooled to $2.68 billion and $972 million from $4.35 billion and $1.57 billion respectively in the previous week. Multi-cap and small-cap funds meanwhile had a net of $1.53 billion and $290 million worth of sales respectively. US sectoral funds, however, obtained a significant $2.74 million, the largest amount for a week since November 27, 2024. Investors snapped up financials, industrials and tech sector funds worth a notable $998 million, $860 million and $657 million respectively during the week. Bond funds were popular for a third successive week, with US investors pumping a net of $8.83 billion into these funds, following $6.19 billion worth of net purchases a week ago. And this is where we wrap it up on this episode of Atn Business on Atlantic Television Network. We are open for advert placement, bookings and commercials. You can connect with us on all our ATN socials on Facebook and YouTube, Atlantic Television Network, Instagram and TikTok, Atlantic TV Network 1 on Twitter, Atlantic TV Net, or you can watch us live on our website at www.atlanticnetwork.tv. Peace and unity are the pathways to progress. I am Fable Chikwesri Michael. Thank you for watching.